said this on a number of occasions in the past, but reiterating it on CNBC yesterday, I thought was very, very helpful for the community, because we just crossed the threshold of 20,000 crypto tokens. And so there's one that's clearly a commodity, and there's 20,000 tokens, most of which are securities. And the entire future of Bitcoin is, for better or for worse, it's linked with the crypto industry. So the sooner that rationale and order comes to the crypto economy and the crypto industry, then the better it's going to be for Bitcoin, and the sooner that Bitcoin will emerge as a mature institutional treasury reserve asset. And they say, get your Bitcoin off the exchanges. So, I mean, the essential thing that you want to do after you acquire Bitcoin is to store it in a safe place. Now, that safe place isn't always a hardware wallet. It might be an organization like Fidelity that's a custodian that you trust, or some cold storage, or some institutional grade custodian, or a multi-sig arrangement with a company that you vetted and you trust. But leaving Bitcoin on an exchange has always been risky since Mt. Gox. So we all learned that. And I think that borrowing or generating yield from a unregistered or unlicensed bank or an immature bank is a risky thing to do. And so, for example, MicroStrategy, we took a loan from Silvergate, but Silvergate was an FDIC insured bank. And when we did that, the terms of the loan were such that we didn't transfer our Bitcoin to Silvergate Bank. We actually put it in custody, and we maintained custody of it. So we could have borrowed money at 0% interest if we had transferred the Bitcoin to one of these wildcat crypto banks, where they would say, they give you a very, very cheap loan at a high loan to value, but the catch is you have to transfer your Bitcoin to them, and then they loan it out to a third party. The challenge with that is that you take the counterparty risk with the bank. If the bank fails, then you lose your Bitcoin. And then you also take the counterparty risk with the counterparties of the bank that you don't know of. And so if they loan it to someone else, to a hedge fund like Three Arrows, and the hedge fund fails, then you also lose your Bitcoin. So you're actually taking two layers of counterparty risk to do business with an immature bank. It always looks good going in. They pay you a higher interest rate, or they give you a cheaper loan. But the counterparty risk, when you calculate it, offsets the benefit. That's why we've never done those things. That's why we never generated yield on Bitcoin. And that's why we didn't choose to take on those kind of loans. So I think this is a painful lesson for the industry, but it's not a surprise. I think for the business to grow up, we need more mature, better capitalized institutions, publicly traded companies, public banks, FDIC insured banks, right, licensed, registered entities. And of course, when you're doing business, what you want to do is always be careful when it looks too good to be true, right? Because when it looks too good to be true, generally it is.
What do you think is Bitcoin's biggest vulnerability right now?
I think that right now, the biggest vulnerability to Bitcoin is the rest of the crypto industry. I think the 20,000 tokens that are unregistered securities, I think the crypto exchanges, the wildcat crypto banks, all the crypto projects, all of the people trading those cryptos, all the crypto hedge funds, and then all of the negative publicity and then the negative financial outcomes that come about from things like Terra, Luna, right? The meltdown of a stable coin that was not stable, that was traded as a commodity, that was really a security, that because they never declared it a security, they never actually made any fair disclosures on it. So you had an under collateralized asset, $50 billion worth of something, trading with $1 billion or $2 billion of equity, right? 50x levered without disclosure, with a lot of DeFi exchanges and other crypto exchanges allowing those tokens to trade and marketing them with leverage. And I think that got cross collateralized into Bitcoin. And so the volatility of Bitcoin on the upside and the downside, and then the negative publicity and the fear that a conventional investor, an institutional investor would have to buy Bitcoin is in large part due to the Wild West and the wildcatters and the crypto ecosystem. And the sooner that we clear out that leverage, and the sooner that the world starts to distinguish between crypto tokens that are securities and then Bitcoin, which is a commodity, then the sooner the industry grows up and the asset class grows up.
That's right. Do you have any concerns about solvency with Bitcoin miners? I know that a lot of them have financed their operations through debt. Do you worry that any are over leveraged?
Well, the elegance of the Bitcoin protocol is that Bitcoin mining is an open, permissionless industry that anybody can join. And every 2 weeks, the difficulty of mining increases or decreases based upon the market dynamic. So